All right, a lot of volatile plays are reporting earnings right now. You have AMC, you have Rivian, you had Lucid yesterday. So there's a lot to talk about here. And what I want to do with this particular live stream is to go over the earnings from AMC today. They just came out. We also have Rivian, and also explore the earnings report from yesterday with Lucid and just how bonkers of a reaction we saw today. So also of note, we want to talk about the VIX, the volatility index, and take your charts, take your questions, and I'll be here as long as you guys have questions for me. So we'll knock all of those out one by one. First up, AMC actually had a pretty good earnings report. It came in at 1 penny per share. That was above the estimates of negative 4 cents per share. They also had revenue of 1.35 billion versus 1.29 that was expected. So it was a beat on the top and bottom line. Really good earnings report, but you would think, especially with the crowd that follows AMC, this is what they've been waiting for. This is what they were expecting, for it to eventually go back to profitability and for this stock to soar. But where is it at? Well, let's pull up the chart on this one and talk more about it. AMC, massive bottoming pattern here. This goes back to September of last year. Really nice. And then it started to break higher. But you can see after earnings, it's actually down more than where it closed the day at. And I really don't get it. And you're going to see that with more and more earnings reports as we go into this particular live stream. So it's struggling to hold any kind of a gain from the initial earnings report. It went as high as 530. Now it's trading at 506. So where does it go from here? Well, I don't think if it goes down, it's necessarily about the earnings report. I think it's more or less about the positioning of people, and people really, traders are selling the news. They bought into it the last couple of days, and then they're selling the news today. So the support levels that you want to watch for going forward, you have a rising trend line right off of this June lows here. That has been pretty consistent. Honestly, it wouldn't surprise me if we come back down and test the 460 level and then get some kind of a bounce there. But you got to remember, some of these sell-offs that we've seen of late, particularly with AMC, have been very volatile and very strong. Yes, we've had some pops along the way, but it hasn't been able to sustain it. And if you go back in time and you look at the earnings, or not the earnings, but the initial jumps in these stocks, they don't do too well. So the other factor is to consider is the fact that, yes, we're selling off right now a little bit, just a little bit in AMC, but that doesn't necessarily mean that we're going to be selling off tomorrow. And what we could see is a reversal. We've seen it with a lot of stocks so far, where it does one thing in the afternoon selling session, and then the next morning in the pre-market, you're getting this huge buying spree going into the open. And if you get that, the main support level that you want to watch, I mean, obviously this would be a massive move, but if you get another epic move in AMC, you want to be watching this 675 level. And so that 675 level has a heavy history of rejecting price. Now, of course, all of a sudden here, if you're long on it, I'm not long on it. So I have no position. I'm not long. I'm not short. I don't care which way it goes. But if it was to get a big earnings reaction tomorrow, then yes, watch that 685 level. I think that's, a less than 1% chance at this point in happening. But if it happened over the course of a few days, again, you'll want to be very cognizant of this declining resistance right here. I'll even change the color so you can see it a little bit better. But this is a heavy layer of resistance that has plagued the stock going all the way back to September. Also worth noting is that every one of these pops, whether it was the one from September of last year, whether it was the one in December of last year, March and February of this year, or just the one that happened a few weeks ago, back in July, it consistently gets sold off. So I understand the dream is to screw over the shorts and to make them pay for shorting this stock into oblivion from before. But ultimately, what's more important is your capital. And I don't really necessarily see AMC being something that's going to fulfill some of the dreams that a lot of people had hoped for. Next, we had another earnings report that came out. That was Rivian. Stock symbol RIVN. And it didn't disappoint either. It actually beat on both the top and the bottom line. They're expecting for the next quarter 52,000 deliveries versus 50,000 expected. Also, like I said, top and bottom line beats. Let's go ahead and look at the chart here for Rivian. One of the things you'll notice is that it's trading in the red. How in the world is that happening? Especially with the reaction we got out of Lucid, when Lucid actually missed top and bottom line and did so in fantastic fashion. And yet it actually rallied today. So one of the things I would urge some caution on is the fact that you have what appears to be a short-term topping pattern following this epic run from June into July, and then it just traded sideways for a while. But we're very close to seeing a breakdown in price here. And what gets even more scarier is the massive gaps that are left unfilled on these charts here. So you have a gap right here that is unfilled, and then you have another gap that's right here left unfilled. So it wouldn't be too tall of an order to possibly see Rivian break this 2365 level and then start to fill these gaps. One would be at about, let's see, high up to about 2177. That would be a significant sell of over 15% from here. And then you could, if that continues to fall, there's no support nearby. You have some support right here. And that could come into play. But again, you're talking about that first gap getting filled again in the 21s. And if this one gets filled, then I would expect for this huge basing pattern that goes back to March to eventually get tested again. So there is a snowball effect here that could come into play with Rivian. Now, it doesn't just stop there with Rivian. You also have some resistance overhead on this particular chart. Let's actually draw this a little bit better here. There we go. Some stiff resistance. You can see where it was especially true when it acted as support back in 2022. It bounced off it on multiple occasions, but now that it broke it back in late December of last year, it's come back around to testing it, and you saw a sharp rejection back on July 27th. So there's some heavy resistance right here at this blue line here that could be also coming into play, forcing it back down to this 2365 level for a potential break to the downside. Like I said with AMC, you could see a completely change of character with Rivian. I don't have any long, I don't have any short on this stock. I really don't ultimately care what it does. I'm just more or less a watcher right now. And if there's an opportunity that arises that I could take advantage of, sure, I would do that. I would trade the stock. But right now, I don't see that. I think even trying to short a stock like Rivian, that's one of those things where you're not going to get a lot of sleep at night. Not really something that I would care to engage in, because as sure enough as this might be a bearish pattern that's trying to develop in the short term, it's also one of those stocks that you could wake up the next morning to a positive news piece and the stock's trading 20-30% higher. And I don't really want to be on the wrong side of one of those. I'd rather short your much bigger mega cap stocks or trade the inverse ETFs instead, maybe even just 1-to-1 inverse ETFs. But right now, you have resistance overhead. You have short-term support that's being tested. I'd be leery of this stock. Now, on the flip side, and I feel like sometimes I'm living in a simulation with some of the weirdness that you're seeing in this market, but I know I'm not. But I don't want you guys to think I'm like a flat earther or something, but which I'm also not. But Lucid, this stock, it had negative 40 cents per share is what their earnings came in at. The street was only expecting negative 34 cents a share, so that was a miss. They came in at 151 million of revenue. The street was expecting 182 million, another miss. And then what does the stock do? It rips. It goes up 9.6%. It was actually higher than that before the Rivian earnings came out. It was actually traded 12% higher on the day. So let's just look at what regular trading hours looks like here. You actually have a nice base that goes all the way back to March of this year. Pretty fantastic. But what you don't have is a breakout that's taken place. So again, this is a stock that's trading under $10. A lot of volatility, a lot of risk in doing those, because for me personally, I won't trade stocks that are trading $10. So guess what? I don't have a position in this one either. But you do have some nice consolidation here of late. It tried to break down and it immediately got bought back up on the earnings. I don't know what you call it. I saw a headline for LCID today that said, Lucid misses earnings, stocks rally, or the shares rally anyways. That's pretty much the market in a nutshell this year. Economic numbers disappoint, stocks rally anyways. And you're seeing the same thing here with LCID. You've got a nice basing pattern, but if you're going to get long on this thing, you need to see it break above this massive layer of resistance. It needs to get back above 754. If it can do that, yes, it has a chance. But you also want to make sure that you can contain the risk. And right now, putting a stop loss below the most recent lows, that's not going to really fly for me. That would be below 618 on a stock entry of like 7, let's say 755 even. That's still not going to work for me. So strong volume today, but you need to see some consolidation before the breakout to be able to tighten that stop loss some, and then actually see it break through that resistance. Because going back to just March, 1, 2, 3, 4, 5, 6, 7 rejections at that resistance level, and that's a no-go for me. Probably, though, the most interesting chart today, for me at least, was the VIX indicator. So let's take a look at the VIX. This stock, or not called stock, this is an indicator or an index, whatever you want to call it, but has a huge layer of resistance. It just doesn't seem like over the last 4 days it wants to be able to break through it. You had the initial test that saw immediate selling. You had this particular one that saw a little bit of selling, just enough to make sure it closed below the 1710 to 1720 level. And then yesterday was a real fail. That opened just underneath, rallied above it, but then it spent the rest of the day selling off. And then today was a cataclysmic fail where it goes all the way up to the 18s and then pulls back all the way down to 1599. That is absolutely what the bears could not afford to have happen, and it did. So there's still that tendency of the dip buyers to want to buy the indices and then to also short volatility, and that's what you're seeing here over the last 3 or 4 days. Volatility has been crushed in dramatic fashion, with the one day being the Friday sell-off in the Qs that also pushed the VIX indicator right underneath this layer of resistance, but it can't break through it. So if it can break through it tomorrow, or if it can break above it on Thursday, that's great. That does change the tune of this index. But right now, the bears are still trying to crush volatility, and the bulls are trying to rally the indices. So going forward, actually, geez, I didn't even put the chart up for it, did I? All right, let's start over. I'll do the VIX again here. Looking at the VIX, we have a significant problem here with the VIX. You have this resistance layer that goes all the way across. This goes back to January of 2023. And again, my apologies for forgetting to put the charts on. My system said I didn't put the charts on. So if I did, then I'm sorry for repeating myself. But I want to make sure you guys see exactly what I'm talking about here. Resistance going all the way across. Stocks struggling to or the VIX indicator is struggling to break above it 3 out of the last 4 days. Today it failed in dramatic fashion. That was a cataclysmic failure on the VIX part. Now, if the VIX can recapture that resistance, that's great. That changes the tune of the market going forward. But right now, we're seeing 4 straight days of solid rejection. So the bears are still trying to crush resistance, and it's doing so right at some serious resistance here that goes back to January 2023. So yes, the bears are trying to crush volatility. They're doing it right underneath a key resistance level, and that's not looking good when you're seeing the NASDAQ and you're seeing the SPY trying to bounce off of key support levels. All right, we got a question here for you guys. We got Eric Duvall. He says, hey, Ryan, can you look at Netflix and NVIDIA? Thanks for what you do. You're welcome, man. I can go ahead and look at both of those here for you. Let's pull up those charts. Go ahead and prop my head up a little bit above you guys there. All right, NVIDIA. So this chart doesn't look like much right now. You've got a little bit of rising support. You're thinking to yourself, man, is it breaking above it or holding this trend line? And that's where the problem comes in. You take a look at SMH, and you're going to see, let's just go ahead and take all the lines off of it. It's got a bit of a double top here. So SMH, for those who don't know, that is your semiconductor ETF. It held the 50-day moving average. It looked a lot worse early on when it was trading below the 50-day moving average. It looked like it was rolling over. Now you got what may be a bit of a hammer candle right off of this 50-day moving average and setting up for another bounce back up to 160. Again, putting back the lines makes it a little bit messier, but you can see this layer of support right here. We'll make it a purple color here. That's holding on pretty well there. So going back to NVIDIA, this rising trend line right here, you also have a little bit of a support level as well that it held on to today. So that does bode well for NVIDIA, but you also want to remember they report earnings later this month. So there's not a huge window of opportunity to be able to hold the stock for a very long period. If you held it for about the last month, you've gotten nothing out of the stock. It's just traded sideways. Even if you shorted it, really didn't get anything from it. So the window of opportunity is pretty slim on this one in order to avoid the earnings reaction. I mean, yeah, it could go to $500-$600 like, the crazy reaction we got last time. But if this support level starts to fail, we get a close below it, you still have this huge gap from the previous earnings that is still unfilled, and you have a rising trend line just above it. On Netflix, I think Netflix looks more like a head and shoulders pattern for the most part. and I'm not trying to come across as bearish. I just talked to you about how the volatility bears are crushing the VIX, and that's giving some support to the SPY. So I'm not trying to be a perma bear. I'm not trying to hate on these stocks. There's not a lot of good trade setups, maybe outside of Google, on the big tech stocks right now. Google has a massive inverse head and shoulders pattern. If you look at the chart, it doesn't look too bad, but head and shoulders, left shoulder, head, right shoulder, that's forming. Maybe it's at the peak of the right shoulder, but in order for this to confirm, it needs to break below the support level here. You could make a case for there to be something bullish going on here. I mean, you get some slight short-term resistance. If it can break above that level, like 444.50, then you may have a breakout that tries to fill this gap right here. This is kind of goes unnoticed just because you have the big candle bar before, but that gap hasn't been filled yet, so that could get filled and take it right back up to 470. So that's the play there with NFLX if it's able to break to the upside. All right, from New Way, amazing work as always. I do appreciate that. And then what do you see on QQQ? Man, let me tell you, you talk about an index that is frustrating the crap out of me right now. It would be the Qs. So since Friday, I got long on PSQ on Friday, got long again PSQ today. I actually sold my Friday position yesterday, sold my today position again today. Cannot get any momentum out of it because every day you get these like crazy nuances that are just driving me nuts on this thing. So with the Qs, you had over the last 2 days actually a positive return for the Qs when Apple, if I can pull up Apple, there we go. When Apple actually sold off 7%, this day here and this day here represented about a 7% sell-off in the stock yet. And this is the biggest stock and the Qs. And yet the Qs managed to rally. I don't know if I've ever hardly seen that before. So if you would have told me before Friday that, hey, I'm not going to tell you what the Qs are doing, but I will tell you that Apple's about to drop 7% in the next 2 days. What would you do? I'd say short the Qs. If I couldn't short the Apple, of course, I would say short the Qs. And then I'd probably even do like a SQQQ or something very light. Maybe I break a trading rule and go into margin. Not seriously on that, but in any case, it would be one of those things where it's like that's almost a guaranteed sell-off in the stock market. Yet you don't even get a sell-off. You don't even get like a 1% sell-off for Apple 7%. You actually get a market rally during that time span. That is incredible. That's a $3 trillion stock that had no impact really on the ability for the Qs to trade lower. So that was frustrating. And then today we start to break down. We break below this orange level here. We break below this rising trend line. And I almost hate it anymore when you get a short setup in the Qs or then the S&P 500 or IWM, because you know what's going to happen. It's going to get blown up in your face and it's not going to really work the way you want it to. So, but guess what? You got this rising trend line off of the March lows. And what happens? It holds it to perfection. And it bounces. Actually, I shouldn't say it holds it to perfection. It sneaks below it just a little bit to get the short sellers in, including myself. And then it rallies the rest of the day. So I take a 0.38% loss or 0.4% loss. I don't remember exactly what it was, but it was marginal. The loss that I took on it before the other day was 0.2%. So it's not a big losses. The losses isn't what bothers me. It's just the lack of technical follow through that drives me nuts. And now we have to consider, are we looking at a bounce here on the Qs? Are we going to just bounce here and blow right through the highs that were established back in July 19th? I think there's a very good chance of that happening at this point, especially when you couple that with what we've seen on the VIX already. I think there's just too much complacency in the market to take any kind of sell-off serious. Now, the one caveat to that is if the CPI number comes in hot, maybe the market sells off. But then how many times have we seen the CPI number come in and the market does not sell off, even when it comes in hot? So I really don't know what to make of it, in regards to the CPI report, because for one, I don't know what it's going to come in at. And two, I don't know what the market reaction is going to be to that report. There's usually this like bullish spin that comes in each and every time. All right, Jose. Etsy. Yes, let's look at some Etsy here. Not too bad. It looked like it was going to hold the support level and then it failed. Tried to recapture it yesterday and then it failed again today. So right now I had this on my bearish watch list coming into today. You almost got almost like a bear flag here. It's a little bit too wide for it to be a bear flag, but nonetheless, it's a sideways channel and it's breaking down below that. So I think that's a big concern there. Now, kind of like what I was saying with the NASDAQ. We've seen a lot of times where these stocks, they will break below a key support level and then they'll rally right back up. That could happen here with Etsy, but I think in the end, what is going to keep us in the game is not taking the chance that that's going to happen, but rather respecting the technicals, even when it sometimes seems like it's pointless to the downside, because there's just so much uber FOMO in the markets willing to buy up anything that makes 0 sense. But when I say 0 cents, literally look at YELL, look at the backstory, and look at how that stock rallied last week. But in any case, Etsy, not a huge fan of it breaking down that support level. Some people might say, well, it kind of held this support level here. It held the lows from June. And that's a valid point. You can make that point, and I wouldn't argue with it. But I would be very careful, though, if it decided to break that level. So that would kind of be my red line in the sand there. All right. Looks like we got all the questions answered here. Good as always, talking with you guys. Invite your friends. Make sure to like and subscribe to the channel so that you guys can get all of the notifications when I do one of these live streams. They're very helpful for you guys, helpful for me too, because you guys give me some stock ideas that I might not have considered. So again, check out the podcast, check out all my social media accounts at SharePointer. Appreciate you guys. Thank you, and God bless.